Borrowers are the big winners from the central bank's newly revised interest rates. South Africans with debt have been granted a 0.25% reduction on the interest for what they owe. But analysts say the only way for consumers to maximize on the new interest rates is by handing over money to their creditors.
Pay off the most expensive debt. That's the most obvious, particularly credit cards and overdrafts. They're the nasties. Pay those off, because that certainly isn't 6.75% or 6.25%. That's like at 17, 18, 19, 20%. So you've got to pay off your expensive debt first and consolidate it. Definitely paying off your bond. Keep your bond payments the same. Obviously, you'll pay off your bond a lot quicker. I mean, pay yourself before you pay the bank, as they say. Number two, consolidate your debt, pay the most expensive off, and save.
FNB economist Matlodi Matsei expects consumer confidence to be boosted by the announcement. But she said that it was unlikely to translate into economic growth.
There's no way that an interest rate cut is going to help boost the economy. The challenges that we have in the economy are structural in nature, and reforms need to be implemented. The more serious and dirty work needs to be done. Cutting the interest rate, as I said, will give a boost perhaps of better or improved consumer confidence, and then perhaps the consumer is also going to be able to pay off some of their debts maybe faster, or enjoy a bit of relief as they pay lower amounts of premiums on their or installments rather on their different debt categories.
For those who are able to, Babich pointed to the bond markets as the place for the best returns. He said bonds remain the best indicator of investor sentiment in South Africa.
You know, the bond market tells the truth. It's sort of the ultimate guide of the state of the economy. And I think our bonds have been well received. You know, we tend to be a bit doomy and gloomy about South Africa. We call it the Afro-pessimism syndrome. But the bond market's quite stable. If you look around the world, all these negative yielding bonds. So people overseas, I think, will still put some of their money in South Africa. I don't think this is going to be a collapse if we even get downgraded by Moody's. It's already priced into the market.
Matsei says while South Africans can be hopeful of another rate cut later this year, it would depend on whether the Reserve Bank continues its conservative stance.
I think I would like to watch out for the Reserve Bank's narrative going forward. I think in the past few MPCs, we were so conditioned that they are, in a way, for lack of a better word, obsessed with risk, you know, while all these other fundamentals were pointing to a cut. So I'm personally just waiting to see where they're going to be with their narrative with regards to this whole risk issue.
While a rate cut does bring some respite, it does come with a warning. Economists say consumers should be prudent and use the opportunity to get out of debt and not into it. For Newsroom Africa on Channel 405, I'm Farren Wiliams in Johannesburg.